Greetings. Today's talk focuses on a review of the Tesla trading as of December 7th, 2018. Our goal from this is to take a look at how with $10,000 you could have made about $1.5 million in 6 hours. We also have some cleanup items on sort of new developments that are happening with Tesla in other realms, including a potential GM plant. But I think we'll allow how in-depth we get with options to drive what happens there. This is Greg for Tesla Fan Insight. Thanks once again for joining us. If this is your first time on our channel, please take time to like and subscribe. If you're a repeat visitor, welcome back. Also, we're also on Patreon. Now, we've had an ongoing class on how to trade options. Tesla is one of the most shorted stocks in the world. I just checked, and 22% of the float of Tesla has actually been shorted. So while the short positions have been reduced from about 25% plus the stock, it's still rather high. What this reflects is the fact that there are a lot of people that still think the company may have severe difficulties and drop severely, and the rising stock price actually says the opposite. So there's a huge disagreement on both sides of that trade. The first thing I should say is this is a disclaimer. I'm not a registered rep, and my goal is not to tell you what to do. My goal today is sort of review what happened and trades that I think were rather interesting in terms of what the dollar value of those trades were. So this video is going to sort of break out in 3 sections. The first section is fairly simple for about 4 or 5 minutes, and the goal is to sort of just frame the situation, and if you want to exit, you can do so at that point because you know in general what's happening. But my agenda is in the second frame to basically review pricing of options and how all this works, and then the third frame is to perhaps get a little more intense, etc. This is also a reminder for those of you who have taken our class or are new to what we're discussing. There's a book by Peter Lynch called One Up on Wall Street. There's also one called The Black Swan by Taleb, both of which I encourage you to read before considering trading options. But the goal today was sort of introduce reasons why you might want to consider learning how to trade options if you're going to be a Tesla stockholder or investor or even a vehicle owner, because there's a huge opportunity that goes with the research that you've actually done. So I had a quiz question that popped up regarding the fact that I had mentioned that there were some options that had gone from about $50 in value to $1,200 in value in the same time on Friday. So the first phase is to just review everything that happened to the degree that I can explain it. And what basically happened is Tesla's stock price opened up at $369 a share. I believe the day before on Thursday it had closed at approximately $360. So it opened up at $369, and the peak price for Tesla on Friday was $379 soon after opening. So why this is interesting is, first of all, the driver for the stock price rising that much was it was announced by Tesla that because the stock price was over $360, they had the right to call their convertible bonds that had been issued, and that they'd be issuing $50 in stock and $50 in cash. Now, I thought it was interesting because 60% of their stock is held by institutions, so I thought it wouldn't be that big a deal, and everybody knew what was going to happen relative to this situation. And my assessment of things is that what actually occurred is that it's a further sign that Tesla's confidently moving the cash necessary to pay back holders if that's necessary. They're also confident that they're going to have a great quarter or next couple of quarters to provide plenty of capital as a profitable company to service their debt currently and going forward. So this is kind of bad news for hedge funds and others who predicted that the stock price would fall. So I'm going to see if more light is appropriate here. So what's interesting about this situation is basically the stock price is rising nicely up to 379, and then we ran into the issues of tariffs, China, Donald Trump, all these issues popped up, as well as what's happening with oil prices perhaps. And so, as we know, the stock price went from 379 all the way back down to close at 357. Now, there's a whole bunch of different ways we could argue about trading this situation, but one of them that I think is very interesting to explain why people trade options is the fact that there's something called a 360 call, and there's also a 360 put. Now, for a call option that was expiring on Friday, in theory, when the stock was at 379, let's say it was 1 hour into the trading day, that means that we had approximately 7 hours before that option would be worthless, and this is the 360 put. Now, what's really interesting is that that 360 put opened up the day at approximately $300-ish a piece, maybe 200 to 250. Once Tesla's stock price got to 379, that option dropped in value to as little as $5. And the reason is that there was a sense that there's no way the stock gets back to 360 before the close of the day, given that it's $20 above that at that time. So what this means is that if you put up 10 grand-ish and bought 360 puts on Tesla, by the end of the trading day, within a half hour of close, those options had gone from in the range of $2 to $5 if you look at the bid ask, to actually $300 by the end of the day. So you do the math. If you do it at, let's say, $5 at $10,000 worth of options, it works out to that 10 grand turning into 600K in a relatively short period of time, 7 hours. So the bottom line is that this is what Taleb covers in his book, and I think that learning how to, reading his book and learning how to trade options is a good idea. And the reason I say this is that in the last, let's say, 4 months, Tesla has done a $100 round trip, like once a month, maybe even twice a month. So as you recall, Elon Musk announced, I believe late August, early September, that he was looking at buying out the company. The stock spiked to $381 a share. And then it was announced that it was not a legitimate, well thought out offer, and the stock then went from 381, as you recall, to 250. So we then had a hedge fund manager turn around and become positive on the stock, and then good earnings came out, and the stock went from about 250 to about 340-ish over a 2 or 3 day period. So what this really illustrates is that Tesla has high delta. It moves around a lot. And if you pick it right while purchasing options, relatively small, 2 or 3 grand, 10 grand, could turn into $1 or $2 million in a day. And so I wanted to kind of review this with you right now, because we're heading into what I call some very interesting waters with Tesla. The basics is that we're entering a zone right now. Turn off this phone. My apologies. Let's see. So what's going on right now is that we're in an interesting situation. That situation is that Tesla is in a zone where I felt like what really happened on Friday morning was we've started getting into what's called a short squeeze zone. So what does this mean? So we're sort of getting out of our initial phase of sort of basic idea of you can buy an option. If you pick it right, you can make a great deal of money on the put side or the call side, depending on the variables at play. today what I wanted to take a look at is some of the complexity increasingly as we go through the rest of this talk. So if you don't want to make serious money by learning how this works, please get off now. If you do, stick around, because over time you're going to see situations go by where huge amounts of money could be made by you if you pick right and you're in the markets at the right moment. And Tesla is one of the great stocks to do that with, especially now. So we're in an interesting zone right now, and I have to call it the covenant zone. And what that means is that there are certain hedge funds that are heavily exposed right now to Tesla. The better Tesla stock price does, the less money they make. The worse Tesla does, the more money they make. So what's going on right now is there's one group of hedge funds who've shorted the stock in that they are basically saying Tesla should die and go out of business and they'll make a lot of money. There's another group of managers who are on the other side of that that are saying Tesla's doing well and are going to continue to do well, and therefore they're called longs, or they could be hedge funds that are not short the stock. They're long the stock. They think it's going to do well. Two separate groups. Institutions tend to be long players, but you can have institutions that actually do hedge or invest in hedge funds as well. So what's happening right now is that many of the people who are shorting the stock face what are called covenants, meaning that if they take a certain amount of losses before they completely go out of business, they have to do what's called covering their shorts. So the process that's involves them having to buy the stock in fairly large amounts of it in order to unwind their position. So when you have 22% short on a stock, the unwinding of those positions mean that they have to buy at whatever price they can get it 22% of the stock of Tesla. So this should be a simple process that I'm describing. It looks like we need more light, and it's not an efficient light source, so I apologize, but we're trying to make that work. So in this sort of second tier of complexity of options on Tesla, what we're really focused is on the fact that you can actually have hedge funds on either side trying to kill each other. In particular, there can be hedge funds out there that will try to force the price of Tesla stock higher than it would ordinarily be. And their goal is to break other hedge funds that are shorting the stock. And when they break those funds, the stock price can spike even higher. So what I expect to occur between now and when earnings are announced, especially if the earnings are good for Tesla, is that, the spike in stock price driven by these hedge funds battling could easily be 40 or 50 points. But it could be as high as 100 points up. So remember when I was talking with you about positioning yourself on options and being able to make 5, 10, 20, 30, 40, 100 times your money in a day? Those kind of things become available for Tesla in this next 45-day window. So it's worth the time to try to understand what's happening, because if you get comfortable enough, there are some rather lucrative trades that lurk. So I bring all this up to you because I think that for those of you who are happy Tesla owners, drivers, etc., your research efforts to understand the vehicle and the EV market and what Tesla does, etc., could really pay off handsomely with some research. So we've sort of entered the, hey, why is the stock price bouncing around so much? Could actually go very high, and it could actually be very lucrative. The other thing, as you'll notice, is one of the variables is not just how is Tesla doing, it's how is the rest of the market doing. With Mr. Trump in action, etc., you can have a great Tesla situation temporarily get ugly as people figure out if there's some disaster on the horizon with China or with the Fed or something that could mess things up. In this midpoint, I also wanted to bring up a conversation about the Fed and what they've been doing. So as you've noticed, as the Fed has said that the economy is showing signs of weakness, this is a sign that the Fed is deciding perhaps we won't be raising interest rates. And why this is big is that anytime you raise interest rates, there are a number of people who want the safety of federal bonds, and therefore if they can get a decent interest rate, they'll leave the stock market and put their money in bonds. So if the Fed doesn't keep increasing rates, there's not good reason for people to sell equities and move over to those bonds. And so that's another sort of lurking variable that one has to think about as you're trying to figure out what to do with options. So the bottom line is, in phase one, we kind of reviewed in general what's going on. Phase two was, hedge funds and the problems they can have relative to spiking the stock as they try to unwind their position if they potentially are going to lose so much money that they'll never be able to recover. And then kind of the final section of what I wanted to cover today is, as you may recall, there are three variables that price an option. That's the delta, which means how volatile the stock is. That's the time value, how much time there is, and that's the proximity to the price or the strike price of that option. So I had a viewer ask the question of, is it possible for 50 to 1200 to occur? Well, let's put it this way. A great trade that was sitting on the table, was, shoot, you didn't have to do the 360 puts. When Tesla was at 379, you could have bought the 370 puts, right? You're spending, let's say, $250, $300 for those each. Tesla's stock price goes from 379 and it closes at 357, which is $13 below 370. So that means a $250 put went from $250 in value to $1,300 in value in about 3.5, 4 hours. So is this a dangerous game? Extremely risky. Can you learn how to do it? Absolutely. Why do people do it? Because if you hit it right, you could become a multimillionaire on a relatively small investment and very quickly. The key to it, though, is it's very, very risky, and you really want to understand fundamentals of companies and then of options trading before you mess with it. But again, it's a risk-reward thing. If you want to do your homework, if you want to do the reading to climb the learning curve, we could definitely help you with that. Happy to provide more information if you want to provide an email address by sending us a note at teslafaninsight.com, or we have Tesla Fan Insight on Facebook. You can send us your email address there. We have a list of folks that we're putting together that, as people get through their initial reading on Taleb's book, as well as One Up on Wall Street from Peter Lynch, we can then get in and say, okay, let's start climbing down. I actually have a kind of a very small pamphlet that is about 10 chapters long that will give you guys sort of the next stage in terms of my thoughts on options and trading, etc., and some experience. And it's like a nominal fee, $4 or $5, but you guys can send me a note if you'd like to get a copy, and we can work that out as well. The final phase is, I've somewhat gotten a little bit technical, but I want to, there's all kinds of amazing math-driven work that people have done, including 50-day moving averages, delta, beta. There are all these awesome sort of trade things that are out there to assist folks in terms of understanding how this works. It's my belief that there's something called value investing, where you're investing in a company, but you're specifically focusing on really solid fundamentals in terms of trading process. And the question is, can you learn value investing and then layer it with things like options trading for a very profitable combination? And the answer to that, I believe, is yes, but it does take work to get this, combination going. And if you have a stock like Tesla that's, I think, is going to do crazy great next year, I think it's worth the effort to learn it, because you can leverage your knowledge, experience with the products to really assess whether you think the company is going to do well, and therefore initially trade the stock, but possibly trade the option on the back of this. So, the last thing I want to introduce to you guys randomly in terms of instruments relative to options is something that's called a straddle. So what is a straddle? So there are a bunch of terms that you'll learn as you climb the learning curve of how to trade an option. And one of those techniques is called a straddle. So let me give you an example of a straddle. On Friday, Tesla's stock price opened up at 369. What you could have done is bought a 370 call, expiring same day or possibly a week or two, however long out you want to go based on the fact that you have enough money to afford that option. So what you can actually do is buy a call option on that, let's say at 370. Now the stock keeps floating north and goes to 379. Once you had about 100% gain on your option, one thing you could actually do is buy puts. And basically you're buying puts at 370 while the stock is at 379. And what happens with those puts is they protect your downside. So in this case, you're owning puts and call at the same strike price. And that's called a straddle, because you now have a way to protect your downside in case the stock drops just as it did. So, these are some games you can play that can end up being, help you provide some safety that's added in. So the final part of the homework today is I want you guys to look up a straddle and what that is. I've explained it, but it's called a straddle, and you want to understand what that is because it can be a great way to protect your gains. Or if you have a bunch of puts, stock price starts to rise, you can buy calls and your straddle would be reversed the other way. So it's a really useful thing to understand, and as you learn how to trade options on equities, or options on anything, but I'm talking about equities right now, I think you'll find that technique to be extremely valuable. The final homework item that I'd like to have you do is on Friday, I'd like to have you take out a piece of paper and note the low and the high of the 360 calls, 365, 370, 375s, and 380s. The reason I want you to read about this is that what you'll see is that there was a huge movement in values up and down, and depending on your temperament, the more of these situations you see, understand, and get a chance to review, there's a better chance that you can make money. The last item I wanted to review, and you guys will recall this, if you go backwards on our show, when Elon announced that he was going to buy the company out and it bounced to 381, I said it can't happen because the company's already in too much debt and they're consuming too much capital. So therefore, it's a no-go. The day I made that comment, the stock was at 381, and then it dropped over 100 points after that. Point being, buying puts on a very, very bad decision like that was very lucrative for a lot of folks. So there were people that made 50, 100 times their money in a week because they were comfortable trading that situation, understanding what the variables were going into that situation. So it really highlights to all of us the fact that it's worth doing your homework, because being involved with Tesla and Tesla's options can be very lucrative. It just takes real work to understand what's happening and implement strategies to exploit what's occurring. So, we're sort of reaching towards the end of our time here today. I want to thank you all for joining us. As you know, your like and subscribes really help to strengthen our channel, provide the resources to actually both provide equipment and provide all the editing and so forth it takes to get this done. We'd appreciate your support on Patreon as well. The link is below in terms of on the description. And also wanted to encourage you to share any comments, etc., that you might have. I'm having an interesting situation going on here where there are some people, it's the first time hearing about our options class, and now they want to ask a question that's fairly basic. And in the playlist for this show are going to be a number of other classes. And I think that what we've covered already on the price of options, how options are priced, the books you should read, are all in those shows. So I can give you a quick answer if you pose a question, but the question and answer is too quick to be worth, getting involved in trading on. It really takes studying, learning how this whole thing works. And like I said, I'm doing some classes on it here, and we'll do more intensives as we have folks that are interested that hit me with an email to point out that they want to learn more, and we can help facilitate that. Remember, I'm not a registered rep. I'm just helping you guys to understand what's going on. But one of the ways you can understand how to trade certain things is to go backwards and look at what occurred. And what occurred Friday was mind-blowing. I think we're going to see similar roller coaster rides for the stock over the next 30 to 60 days. And I think there are going to be more opportunities to trade situations exactly like this, which is why I'm taking the time to review this situation. So, time for you to make some money, but unfortunately you got to do some homework before you do it. And we're here to support you if you feel like you want to try to make the climb of the learning curve. This is great. Remember, I'm about to do my 20 leg lifts on both legs. Remember not to go to bed within 2 hours of eating. Omega-3 to help your health out, and a half-hour walk a few times a week is definitely a good idea relative to healthier living. Again, thank you for joining. This is Greg for Tesla Fan Insight. Tschüss, macht's gut, au revoir, lehitraot, choda hafez. Look forward to our next conversation tomorrow. Wanted to get into the whole GM plant issue and some other items that are on the deck, but this kind of ran long, and I think the value is a lot higher than some of the things that we could have been covering. Have a great day. Bye for now, and thank you.